welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in.
Alrighty, we are here with a group I have long admired from afar a lot of times and haven't been able to do this yet with, because we are competitors on another podcast, but we'll get into that later. But it's my distinct pleasure to be, for one of the first episodes of 2022, to bring to you Adam Blumberg, Steve Larsen, and Justin Pullaro. We're going to have a discussion around a review of 2021 in digital asset markets, and then we're kind of talk about what we can expect or what we're looking towards in crypto asset markets for 2022. And then we'll just have a fun conversation. So I can't wait to see what comes about. But Justin, go first. Introduce yourself to the audience.
My name is Justin Palero. I am a certified financial planner for the past 19 years. Seen a lot of things, and one of the many hosts of the Crypto for Planners podcast, which aims to be a decentralized podcast put on by the Planner DAO. And hopefully we can chat about what the Planner DAO is.
Oh, you know it. Steve?
Hey, Steve Larsen. I'm a CPA and a CFP. I run a RA firm here in the Pacific Northwest. Now, I'm not as far northwest as some firms on this podcast right now, not all the way up in Alaska, but I'm pretty close up in Spokane, Washington. And yeah, involved in the DAO and the CDA and all these good people now. So it's been a great time, but mostly I'm just recovering from that crazy New Year's we just had, Mark.
Oh, yeah, I can imagine, man. Glad you can still make it then.
Yeah, no problem.
Adam.
My name is Adam Blumberg, also a certified financial planner. Been in the finance business since 2009. And also one of the co-founders of the Certified Digital Asset Advisor course and designation, and one of the co-founders of Planner DAO. And I have also been able to host Crypto for Planners podcast and been a guest on yours, Mark.
Yeah, so you're going to recognize a few voices here if you've listened to either of our podcasts. But it's a collaboration that's been a long time coming. I know there's a lot of work that we're partnering on for 2022 within Planner DAO. Which is a decentralized place for financial professionals. We can call it a network, a social platform, a designation platform, education platform. There's so many things we could call it. So maybe we can narrow it down for people and help them understand on this podcast too when we talk about the future. But really, we're here today to dive into, let's review the year. Let's see what happened. Let's talk about what we thought were the most significant events. And then we can get into what we see as to the next steps to getting adoption in this space and legitimizing it for future professionals to get in. So I'd like to kick this off with the first question, which is what we felt were the most significant events in crypto that led to adoption this year. So Steve, I'm going to let you kind of jump in first. What do you think was that significant event for you?
Yeah, well, obviously, I think the most boring one that we're going to talk about is probably my favorite, which is EIP 1559. And to simplify that a little bit, because hopefully we're not driving off all the non-crypto natives, basically it was a change in monetary policy for Ether, which is the primary currency and the coin of the Ethereum network. So one of the critiques of Ethereum has been there's no monetary policy. What's the issuance policy? Are we just going to print money forever? And, is it going to be like the US where we just print it when we feel like it? Or is there going to be something we can rely on here? And so EIP 1559, which stands for Ethereum Improvement Proposal, addressed a lot of that. So it didn't totally fix it, but it did make a more predictable Ether issuance policy. And for the hardcore Ethereum geeks like myself, that was a big deal. And I think so far it's working. So I'll go ahead and lower that bar for the two of you, and you can talk about something much more exciting now.
No, that's a huge event that happened, especially for the history of the Ethereum network, right? And especially when you talk about what's going to set up the Ethereum ecosystem for success in the future, it's a huge move. And while we haven't actually seen the tangible effects of it yet, like right now, I think people are setting up validator nodes right now with ETH2 staking, right? And there's still a lot of work being done and nothing really yet has been released, which is also a criticism of it. It's still a significant point that we're probably going to look back on beyond even 2022. But Adam, Justin, do you guys agree that, what are your thoughts about EIP 1559?
Oh, it obviously is big when you start talking about, okay, now ETH is going to have a monetary policy and function like a little bit more like a currency, have a, the way I explain cryptocurrency to a lot of people is it's the currency of a network, much like the US dollar is the currency of the United States, and much like the EU or the euro is the currency of the EU. ETH is the currency of the Ethereum network, which is, far and away the largest smart contract network. And it should have a monetary policy. It didn't at first because the creators of it weren't sure where it was going to go. Mm-hmm. And when it got to this level, it was time to start that and make sure that ETH, the cryptocurrency, continues to have some value and have a way for, especially us as financial planners, for those that are investing in it, for those that are financial analysts, have a way for them to identify what the value might be, because it's really hard to identify some sort of value for something when you have no idea how many of it will ever be created. And once you have some sort of idea about how quickly it's going to be created versus how quickly it's going to be utilized, because it is a utility token, mm-hmm. Now you can start to have some degree of valuation around it.
Absolutely. Justin, what do you think?
Yeah, no, that to me was we finally had a direction to start doing some real valuation metrics and tools on this large network. And so, that definitely was a major milestone in the growth and the maturation of the Ethereum network. And I think it's going to be just fascinating to see just how much ETH gets burned over time as it gets used and deployed in literally every single corner of the blockchain industry, whether it's DeFi and NFTs. I mean, Ethereum touches everything. Mm-hmm. So there really is going to be a fascinating look at how that plays to what the value of an ETH token is going to be.
Mm-hmm, absolutely.
And I think going back to the original question, Mark, what led to adoption this year? What was the biggest points? As much as it's probably painful to say as financial advisors, I think far and away the most adoption was through NFTs. It got most people, more people than anything ever, involved in crypto and DeFi, because they didn't have to think about crypto and DeFi as much. Yep. And we can, as financial advisors, there's even, so many people that laugh about it as digital art or JPEGs or something. Some really important points came out. One is, it was really not really difficult, but it's somewhat difficult to get across to people the idea of scarcity and digital scarcity when it came to Bitcoin and other cryptocurrencies. It was much easier when it came to some sort of art or collectibles to say that the value of this particular piece of art or the value of this collectible is such because there's only one of them, or because it's one of 500 or one of 10,000 or, one of 200 LeBron James moments or something. That was huge because people started to understand the idea of digital scarcity and why it might have value. On top of that, it brought so many more people in, had so many people starting to understand wallets and starting to understand how to interact with a different type of custody, with self-custody. It's starting to get people angry at Dapper Labs because they go, I put my money in here and I can't get it out. And now I'm looking for something better. And before they weren't looking for anything better because they didn't know any of it existed. And now they're looking for something better. And the more exciting part is now there's all this money that's gone into the infrastructure, and we're going to see what NFTs can really do. And that's when we have digital ownership. We have proof of digital ownership. We have people starting to issue music on chain and selling the royalties to that music. What we saw with Bored Apes, where people could buy these NFTs and actually own the rights to that, own the media rights. So if that Bored Ape gets used with Adidas or with a sports team or something, that person that owns that particular NFT is going to receive some of those royalties. That is a huge deal when it comes to crypto and digital assets, because that to me is what's going to really add to adoption.
Yeah. And it's funny because when you talk about NFTs, again, no one predicted that if you were talking about smart contracts and the technology of NFTs, what was going to be the way that it got introduced to the masses. not a lot of people would have been, well, it's going to be CryptoPunks. It's going to be crypto. Maybe the CryptoPunks and the CryptoKitties, the people who were doing that probably told you that. But people like us, like I didn't see NFT. Like if I would have guessed, I would have saw like real estate being put on the blockchain and creating NFTs through digital ownership and showing how it works logistically, how you can prove ownership on a blockchain versus how you prove ownership on traditional rails. I thought that was going to be a game changer. And before then this whole craze comes in and it's kind of rose. And once you see like the smart contract and how you actually write in royalties and actually see like, and you can see the history on the blockchain, like you go to Etherscan or Solana scan or whatever scanning tools, right? Like that's huge, right? Steve, did you see also NFTs coming in the way they did this year?
No, but they've always been fascinating. I had no idea they'd be that big this year. But I think Adam has the primary point there, which is people are going to be onboarded into crypto in different ways. Mm-hmm. And different things are going to interest them. And I think everybody kind of mentioned that, which is, we can get excited about DeFi, but the reason we have jobs is because most people aren't excited about DeFi. They're excited about other things that aren't finance related. And so it was, I must say it was a surprise, but it's also very, very exciting. And it gave us kind of a precursor of how we're going to onboard people, how we're going to take their actual fiat money and give them something on chain. And so I think even on the DeFi end and the wallet end, we learned a lot through that process about what is and is not going to work.
Yeah, absolutely. The way I say is like when I'm talking to advisors or anything, like go test out something on Solana or some of these other chains that are it's very no big transaction fees like on Ethereum. And just go check out how it works, because this is going to be when you want to buy a tokenized version of private equity or things that normally have no liquidity or are very difficult to prove ownership on, right? This is going to be the same way. You're going to go onto this thing, you're going to set up this wallet, and you're going to be able to view the history. You're going to have to be able to see everything that way. So once you start connecting those neurons in your brain to see how they work, it's going to be a much easier way for when those things come to fruition in reality for tokenization of other assets, not just arts and collectibles. You're going to be way ahead of the game. And Justin, I saw you nodding your head kind of a little bit. Like, what are you thinking?
Oh yeah, no, I think that the NFT summer was one of the major markers we're going to put down and look back in the history of how crypto and digital assets evolved, and look back and say like this was a significant moment, because we did cross over some sort of very niched financialization of cryptocurrencies into the cultural mainstream public. And that's really what to me NFT signaled was you had a cultural vibrant, it was exciting, it was cool to be a part of NFTs. And I think that's I don't think many people would have guessed it would have been art. But we have had and seen in the past adoption cycles happen, and when all of a sudden it becomes cool to do and it becomes the thing through larger mainstream, that's when things have this rapid network effects and just explode. And so I think we saw that as Solana as a chain really grew into itself. It was mostly through NFT adoption. I'm really excited to see how this continues to evolve. I think Adam brought some major points about NFT is just scratching the surface of what it can do and the kinds of things that it's going to open up as utility becomes more and more a feature and less of the JPEG kind of thing that you see with an NFT.
Yeah. Did you guys see? So one of the things I saw this year was, you guys know Carl Richards, right? So shout out Carl Richards. He's one of my indirect mentors, I will say, when I was advising and running a book, and very important the work he's done. But he's like the master of simplifying and doodling, especially hard financial concepts. So one of the things I really enamored me with him, he actually made some NFTs this year and put them on and sold them. Like I was like blown away when I was like, oh my gosh, even Carl Richards is getting into the NFT game. So that was a little surprising. But Justin, was there anything else that you thought specifically was one of the significant events for crypto adoption?
No, I definitely think the NFT on-ramp for a broader spectrum of people was to me the defining moment, where again, there was a very real argument of listen, the people that love Bitcoin and DeFi are a very specific kind of people. This is a very small niche. You could have that conversation, but with Top Shots and NFT, just again, you're seeing other chains explode with users and wallets, because this is now crossed over a point in my mind where there's no going back. The adoption and the acceptance of digital assets is here, and we're just in the beginning stages of seeing how it all plays out, because again, this is now a cool thing to do, which again, we like DeFi, but DeFi is not cool.
Yeah, that showed from, I think, the tops in May. DeFi's definitely been a struggle the rest of the year. But I think one of the most significant moments for me, I think, for crypto, and again, Steve, you say yours is boring. I think mine is even more boring. But I would love your guys' thoughts on it. And this is more Bitcoin specific, is the whole, migration of hash, right? That we saw with the China ban, right? Computing power moving away and all the mining operations. I thought that was huge, because one thing I saw at the beginning of the year was kind of, crypto provenance, right? That was going to be a thing. Like there was maybe going to be a premium for proof of work coins that were made in regions that were not on an OFAC list, for an example. And I thought that was a really interesting concept. And so when that whole mine happened, kind of proved that, okay, yeah, there probably will be something like that at some point where there may be a premium. I don't know if that's going to exist at some point, but that was a significant event, because then it opened up this opportunity for other players to come do a grab, right? And really get involved and really start innovating. So what did you guys think of that whole thing that happened earlier this year, aside from Elon Musk tweeting ridiculous things?
Well, Mark, like you, I'm in Texas, so I definitely saw all those miners come here to Texas. And it was really interesting from that perspective to see how the oil and gas and the energy players in Texas have kind of exerted their power, no pun intended. And all the Bitcoin people came in, thinking we're riding in with our Bitcoin miners and everyone's going to want to sell us power at whatever price we say. And here are these energy players going, no. We control the power cord. You have to play by our rules. And you ended up, and I saw this firsthand, you ended up with a bunch of, 70 plus year old white dudes basically deciding how much energy and at what price the Bitcoin miners were going to get it at. And they basically said, look, we still control what comes out of the ground and how we turn it into electricity. And if you want to play that here in Texas, then you have to play by our rules. And I actually thought that was really interesting, the way I've seen it play out from the inside as we try to get some mining going here in Texas. But yeah, I think moving a lot of that away from China, it was instrumental in the Bitcoin talk, because that was one of the big objections, right? One of the big objections you heard is like, well, China controls it. China has so much control over Bitcoin that we don't know if we like it as much. And now we've moved all the, so many of the miners here to the US that really can't be that much of an objection anymore.
Yeah. Steve, how about you?
Yeah. I think what's interesting, these all kind of follow the same theme, is that we're getting a lot of questions answered, right? So like, what does Ethereum look like with a monetary policy? Well, we found out that it has a much harder floor during volatility. Very cool. What does it look like to onboard tons of non-crypto users into crypto, even without them knowing it possibly? And that was the NFT. And I think some of the questions about Bitcoin are, what happens if China finally follows through, right? If they finally kick out the miners, if they finally do this. And the answer is not a whole lot. It's kind of okay, right? Like maybe not quite everybody wants it, but it's kind of okay. And so what's exciting is even some of these things that are, even if they're not short-term victories, even if they're short-term defeats, the fact that we get the answer and things keep running, I think is really exciting. So when I look at Bitcoin for the last year, yeah, it hasn't had the price run a lot of people want, but they've also answered a lot of questions that have really, they lend credence to its stability and to its long-term security.
Mm-hmm.
Yeah, I was fascinated to see just the power of what a decentralized network can do. So I'm down here in Tampa, and we have Central Command, and one of my good friends does logistics for special forces. And it would just blow your mind to know the layers and layers of people required to simply like pull up shop and drop down into a new location, and the amount of administration it takes to have this major force get moved. And then you look at Bitcoin. There was no ringleader checking off the boxes. I mean, this was truly just a decentralized network that just relocated. I mean, it was fascinating. There was no drop in, like you were talking about the hash rate. It was, I think, one of those, again, seminal moments where we look and to Steve's point, you're seeing the maturation of a space that we've all sort of hoped and thought and believed that it would do this, but we are now having tangible evidence that it's doing so.
Yeah. I mean, a lot of really good points. And I think that, so Steve, you mentioned kind of a lot of questions got answered, right? Like this year, and that's kind of a theme. So let's kind of shift the conversation then. Like, what are some questions that are still out there that you think need to be answered heading into 2022?
Yeah, that's a really good question. Like, for me, it starts with the continued evolution of the Ethereum network as kind of the lead security, the lead decentralized security blockchain that you can build on top of, right? Not saying it's superior in every way, but it's the most secure where the most innovation is happening. So I think that has to start with what's going on there. But it goes just beyond ETH 2.0, the merge, whatever we're calling it. And I think the development of layer twos is the most fascinating question. When there are more transactions on layer twos than on mainnet.
And real quick, Steve, sorry to interrupt. What's a layer two? Real quick.
Yeah. No, thank you. Jumping way too far ahead there. Yeah. So one of the complaints about Ethereum and all blockchains once they become successful is that the blockchain has limited space. And so eventually you have to buy up that space and the fees get higher. And so high fees are a sign that it's in demand. And so you can either go to a blockchain without as much demand and thus lower fees, or you can try to build on top of it. So what Ethereum is doing is they're adding what's called layer twos. And so what they do is process a bunch of transactions away from Ethereum, then they combine them into one big batch and settle them to Ethereum at different intervals throughout the day. So it's a way to increase the capacity and the scalability of a blockchain. So Ethereum is—
without giving up the security, right?
Without giving up the security. That's the key. Exactly. So Ethereum's the farthest along. They have many functioning blockchains, or I'm sorry, layer twos that are on top of it. And most of them are working really, really well. However, they can't be their own silos. Every layer two, for this to work, has to be compatible with the other layer twos for any of this to make any sense. And we have some early protocols where it is working, but we're not even in the ballpark of a stress test. So as people start bouncing their assets around, custom assets and things are created on the layer twos instead of being created on mainnet, how portable are all of these things? So my big question for 2022 is, do these layer twos all start talking to each other and increase the scalability of Ethereum 1,000-fold or 10,000-fold? Because that's what will happen if they can.
Yeah. And Adam, can people learn more about, like, CDA goes over these types of things, right?
We have had to start going over those types of things. When we started this back in February, it wasn't even a thought that we would have to go into layer twos a whole lot. I mean, no one had heard of Polygon / Matic and all these other. Exactly. It wasn't even that much of a thought. Solana was way down there as an alternative DeFi protocol or DeFi blockchain. So now we've had to start teaching these, and what we have to start teaching in the CDAA just keeps getting bigger. I mean, look, when we started, I didn't think I was going to have to go into NFTs that much and DAOs and layer twos, and we have to get so far down the road. But that brings up an interesting point, Mark, because when we're teaching financial advisors about crypto and how to make it part of their practice, and so much of what we hear starts and almost ends with most of the talk with Bitcoin, right? Financial advisors are going to tell their clients about Bitcoin. It's the safest. It's got the most infrastructure, all of those things. And we have to ease financial advisors into it. They're not going to understand it, whatever, or it's not going to make sense. What happens, I can tell you without fail, is as we progress through our CDA course, which is 6 weeks, when we get to the parts about DeFi, is when light bulbs start to go off, and I can actually see the light bulbs going off when people start understanding lending protocols, and people start to realize we can settle transactions in a matter of seconds, that you and we can lend money to each other. I can lend money somewhere else. We can create these liquidity pools for exchanges and lendings and derivatives and everything, that we can use NFTs on this blockchain. And, I could, if my house were an NFT, I could sell it to you in a few minutes. Those light bulbs go off for advisors, because financial advisors know where all the inefficiencies are. They know how ridiculous it is that we still have T+2 or T+3 settlement. That if I wanted to send you money at 4:00 on a Friday, you're not going to be able to use it until 8:00 Tuesday morning. That's absolutely ridiculous in this world. And financial advisors get it better than anyone, because we've all complained about how long it takes to get money out of a custodian like Schwab or Fidelity into any place else. And there's no decent reason for that. And now we have the system to do it. And we have the system for all of us to participate in the economy. And I don't mean to get off on a soapbox here, but that kind of went down the road of what we've had to teach. And it was really interesting going through this. So when we started teaching this course, I really thought that it was going to be 98% Bitcoin with a little sprinkling of ETH and DeFi, because no one was going to care. And without a doubt, if I went 3 more weeks, it would be 3 more weeks of people asking me nonstop questions about DeFi.
So it sounds like one of the questions for you heading into 2022 is kind of a combo one: education, but specifically education beyond just Bitcoin for advisors and more masses.
It is without a doubt education, and education, not just about how it works, but education about how those advisors can get their clients involved in DeFi, how they can get them those yields that we see, how they can get them something on their stable coins and be able to keep it safe. That's what investors want. They don't want their money sitting there doing nothing. And they realize that, a lot of what they're doing in index funds and ETFs is the same as everyone else is doing. So where can they get something a little bit different? And can advisors understand it enough to get their clients in there, get them more yield, get them more opportunity to participate, and do so in a safe way? That's what they want. They want something that's differentiating. We've heard for years about how advisors need to develop a niche, right? And we keep hearing that over and over again. And the niche for the last few years has been advisors trying to develop their own content or something. And now we have one. Like, now you have the ability, if you're an advisor, to go into something where you can help your clients earn a little bit more, or you're going to find clients that already have a bunch of crypto. You have no idea how many of your clients have become wealthy in crypto.
Yeah, a couple things on that. First is, I just recently read an article about a study that a group did about millennial millionaires, and that half of them keep 50% or more, the millionaires specifically. So the ones that have generated the wealth, half of them have half their assets in crypto, or have generated it from crypto. And then I think the other thing goes to, Steve, you mentioned this on one of the last CDA calls, and I've seen you on a few other things, which I just get so jazzed every time I hear you say it, is that if you're just allocating as crypto allocators, and you differentiate advisors and how they can be different in the space, you're kind of missing the opportunity as well, not just crypto allocating, but becoming crypto native, and with your business and thinking about how it can take your business to the next level, right?
Absolutely. So yeah, specializing in crypto and digital assets is a niche for now, but I don't know, if the right things are going in 18 months, like, that might be a generalist. It's just going to have to know that stuff. And then your niche is going to be NFTs. Your niche is going to be crazy DeFi lending platforms. Like, it's going to be DAOs. There's going to be no end to the niches within crypto. People aren't going to have to search very hard to find them anymore. I can't tell you how many articles I've looked up on, I keep reading, I need a niche, let me find one, and then I go take a nap because it's exhausting and I don't want to do it. In crypto, that's not hard. Like, you end up down these rabbit holes all the time that could potentially be your niches, and it's really exciting. So you could just work with millennials who want to grow beards instead of do other things if you want. Like, there's no end to what you can do in crypto.
Yeah. And I think that's at the big consulting firms that I used to work with for other advisors across the country. One of their pieces over the last 5-6 years was find the niche. Adam, you mentioned it, and Steve, you're kind of affirming it. But Justin, how about you? What are the questions that you think heading into 2022 that you're seeing?
Yeah, I wonder if 2022 is a year we start to get regulatory clarity. We've got an election cycle coming up. We've seen where people who have made money in crypto are becoming far more aware and active, and just whether it's forming, PACs and making contributions to candidates who are specifically pro crypto. And so I wonder if this is the year that we finally get anything, a direction, some better thought leadership from the U.S. We're still stuck very much in the same place we've been in. We've got a few, proponents and advocates that continue to sort of voice, what digital assets can offer, the United States, but we have too many regulatory bodies fighting amongst themselves what even definitions are, and at worst they're just dragging their feet on purpose. And we have this, again, I believe we've crossed over so many points of no return now that this is not going away. The rest of the world seems completely content to march on with just all the on-chain DeFi, all these things, and we're still trying to figure out if we can have a spot ETF or not, and so I'm hopeful that with the the introduction of a lot of this crypto wealth making its way into political and campaign contributions that are deciding, hopefully they start to see this is a real thing here. And unfortunately, DC, K Street, all those people that they understand political contributions far more than they understand the importance of on-chain governance. And so maybe this is the year we finally start to get some of that clarity.
Yeah. I was wondering how long it was going to take for us before we got to the regulatory side of things. But yeah, for us, I think we've talked a lot about this. And when we think about themes for 2022, what's going to really cause the next adoption, especially DeFi or things of that nature? Any type of regulatory clarity is going to be helpful, right? There may be some short-term pain from a price standpoint, but when you talk about infrastructure being built, any little breadcrumbs are going to, be able to take these things that are just waiting to take off, because they're going to have that comfort level that they're not going to go to a conference and get served papers by the SEC, right? Like it's hard to really spur innovation when that's what people most likely have in their minds when they're sitting there doing a bunch of things. But Adam, what are you thinking on the regulatory side? What do you think we're going to see in 2022?
I'm along with Justin. I just want some sort of clarity, right? As long as that clarity it's all illegal, which would be a little bit ridiculous. Mm-hmm. Just some level of clarity so that we know what we can do and what we can't. And there's some sort of path for getting to that compliance, for getting to regulatory compliance for some of these, the protocols, the companies that are out there. I think that will help. Again, we talk quite a bit about what will add to adoption for financial advisors. And I think that's one of the items that's really stopping financial advisors from getting as involved, is the worry that I'm going to put my clients in something and then the SEC is going to decide that was actually an illegal security and they're going to get fined and the price goes down. And then my client gets upset with me because they've lost a bunch of value. So in the absence of that, I'm just not going to get involved until I know what the SEC is going to do or what Congress is going to do or whomever. I think some level of regulatory clarity would be welcome, again, so long as that clarity isn't a wholesale, it's all illegal.
Yeah, it's interesting too when you talk with legal teams at different firms, and everyone's got different perspectives on where is the first regulation going to come from, what questions are going to get answered first from that standpoint. And I think the fundamental belief for most legal teams, at least, is that nothing that is happening is quote unquote illegal, right? In terms of blockchain technology and trying to apply it. It's really those bad actors, and it's funny because I think advisors are actually in the best position because we are always thinking risk first, right? Like, how do we manage risk for clients, not just in the investment side, but just in total holistic wealth planning? How do we protect wealth? These people work so hard all of their lives. So the first thing you have to look at it and come at it from is that risk perspective. And the RIA space is very interesting too, because we're the ones that can be more nimble, right? We can be flexible. We can innovate and iterate a lot faster than a lot of these bigger firms can. So, I mean, Steve, I remember when we had a conversation in February with you together, and both of us were kind of like, what are the options we have? We have this option we've adopted, and we're doing this. And you're like, well, I think I may want to do this. So, I mean, how have you been able to be nimble and flexible in such a tight regulatory environment?
Yeah, I think that ability to be nimble has allowed, both of us to sprint towards the front of the charge, right into the waiting bayonets, perhaps. But at some point, right, you have to do it. And the interesting thing about regulation is the tension between the regulatory uncertainty and our fiduciary duty. They are in direct conflict, in my opinion. And so if something's illegal, it's illegal. That's the end of the discussion. Mm-hmm. If something's undefined and it's the right thing to do, and it's the right thing to do, then what do you do? And I know I personally am facing that more and more every day. I think as advisors learn more, they are facing that every day. And at some point, we're going to have to be forced to be more aggressive. I've felt obligated to be a little more aggressive than most firms, because as a fiduciary, I think I have to. I think I have to discuss it. I think I have to offer cryptocurrency. I think I have to start incorporating it into the future. That's just where I'm at. That doesn't mean every advisor needs to be in the same place. But I think more and more are moving towards where I'm at, and I know where you're at and everybody on this call is at, which is at some level, we can't just sit by and say, regulatory uncertainty, sorry, we're going to let the usual suspects make money while you watch again. Like, I have no desire to do that. So I am willing to put my firm out there a little bit to help make this happen, because quite frankly, it's the right thing to do as a fiduciary.
And to piggyback on that, Steve, is what we talk about all the time, I think, is as long as there's going to be some regulatory uncertainty, the crypto world and the DeFi world is going to keep pushing forward and going to keep bringing out new products and new services and new unbelievable parts of that economy, to the point that the longer that regulators wait, they're not going to be able to pull it back. And they're just going to have to accept it and go, all right, whatever, you guys keep going, and there's nothing we can do to stop. Just make sure that you're not laundering terrorist money or something, and we're good. And it's kind of what Uber and Lyft did, where they just kept pushing forward and pushing forward. And by the time, local governments tried to pull back, it was too far gone. There were too many people that wanted an Uber instead of a cab. So as long as the regulator, as much as we say we want regulatory clarity, those of us that really like DeFi and crypto and really see the efficiencies kind of want it to remain up in the air, I think, for a little while, to the point that there's no bringing it back, that there are so many people using it. Because I joked earlier about, as long as they say it's, as long as that clarity isn't, it's all illegal. Well, there's no way that any regulator with the US government is going to say this multi-trillion-dollar economy that's been built is now illegal, and we're going to erase trillions of dollars of wealth and value. There's no way anyone's going to do that. So as long as this ecosystem keeps building without that clarity and in this kind of void, then it might get to a point where the regulators just have to throw up their hands, or you form a whole new regulatory body that says we're going to have one that regulates this. Because in all honesty, we can say that there's rules for it. There are plenty of people that say we've had the regulation, we have the rules for it, but we absolutely do not. I don't feel, and this is my opinion, I don't feel we have the rules for it, because for as long as this country has had these regulations, and I'm talking about the US here, there have been regulations that foster technology and foster technological innovation. That's one of the reasons why the US is in the position it is because of the power of fostering innovation and technology. And we've also had the rules on the financial side that say, once we foster that technology, we have the ability for people to invest in it and help grow that technology, but both within the country and worldwide. Now we come to this weird point where that technological innovation actually is the financial system. So how do you have a rule for that? Because you had those two pieces separate, where one funds the other and one grows because of the other. And now they're the same thing. And we've never had that before. We don't have anything in place that says, how do we put these two major systems together and understand how to work it? And by the way, we have a bunch of 65 and 70-year-olds trying to figure it out. And they're the ones who are in charge of making the rules now, that really don't understand it very well.
Yeah. And then also it comes down to motivation too, to figure it out, right? Like, I think one of the things, especially if you've already thought about kind of where my exit plan is, like, are you going to work until you're 90 or 100? Like, it also you have to have that conversation too. Like, the people making decisions that are going to affect the next 30 to 40 years, right, of our livelihoods, like, where are their motivations? So, I mean, it's a lot of really hard conversations to have, but kind of transitioning a little bit to broader, regulatory risk is important. Like, if we're having a risk conversation, what are some other risks that you see heading into 2022 then for crypto markets specifically? Justin, you want to tap in first with this one? What other risks?
Yeah, and this is just maybe a more broader thought that, what do crypto assets do in a major sort of, let's call it a bear market, say, given the size and the scope of where, digital assets have grown to, we haven't seen anything of a tumultuous market. If you look back, I guess in, February or March of 2020, we had that sort of COVID initial hit where, all assets sold off. And so, I think about like, what do crypto markets do with some major, macro headwinds? We haven't really seen it yet, I think, and some of the arguments that we have about, well, these are alternative assets and they don't have strong correlations. Like, in my opinion, I don't think we have enough data to know. I mean, we have an idea or a direction, but that's certainly one thing. Is what happens if the larger macro picture changes for crypto? Does it impact it? Do we see it continue to thrive? Do we see it just completely take off in a different way?
So do you guys see anything changing with the macro narratives right now? Obviously, we all know Bitcoin specific to the digital gold narrative. I think a lot of these everything else like Ethereum and all of these other tokens and projects being built on Ethereum or these other layer one blockchains. A lot of people see it as just VC, early stage investing. But what are you guys seeing there? What would happen if those macro narratives change?
I don't know. Like, I don't know what, I guess, macro narrative there would be besides regulation, because all it is just an inevitable march towards progress and efficiency. Mm-hmm. And it's not like when it's more mature, there won't be ups and downs. And it doesn't mean prices won't go ups and downs, but the underlying technology goes in one direction. And it hasn't even tapped 1% of its potential. And so I don't see a lot of macro trends, to be perfectly honest, outside of regulation. That's the only thing that can influence sentiment, both within and outside of the industry. As far as any economic headwinds, they benefit crypto. Economic tailwinds benefit crypto. I'm having a hard time coming up with a scenario from an economic standpoint that doesn't benefit this industry.
Yeah, and it's tough. We're right there with you.
Yeah. Right. And so going again, piggybacking on what Steve said, there are people, I've heard plenty of people calling for a bear market in crypto, and I'm not quite sure what a bear market means. I think a bear market means the value of all the tokens goes down kind of at the same time. What I look at is that's really taking traditional finance thinking to crypto, which actually doesn't make sense, is kind of hypocritical in that for the last several years, all this infrastructure has been building. There's been more money going in. There's been a ridiculous amount of VC capital raised this year that hasn't even been deployed, right? I mean, there's billions and billions of dollars in VC capital waiting to be deployed, looking for something. On top of that, you actually have protocols that are moving money, that are actually doing something useful. They're not just, as someone issued a token with the hopes that at some point it will actually be used. There are tokens or protocols actually being used. You had all this money going into NFTs. You have everything being built. It is the progression or the evolution of the technology and the evolution of the financial system. So does a bear market mean that every token goes down because it's been a certain amount of time and therefore it should happen? That doesn't really make sense in where we are in crypto and DeFi right now, because even if the traditional markets start to go down in value, even if money starts pouring out of there, one, it's got to go somewhere, right? Money has to go somewhere. The reason why the traditional markets have gone up so much is because people have not been investing in any sort of fixed income in a while, mm-hmm. and they've had to go somewhere, which pumps stock prices up. Well, if stock prices start coming down for any reason, the money has to go somewhere, and it's going to go to the more efficient system. We as humans tend towards more efficiency. And that's probably where it's going to go. And I'm not here. I don't want people to be like Adam's the one who said that there's not going to be a bear market in crypto. But the current narratives around, well, it's time for a bear market, or it's run up enough, or there's enough money. There's a ridiculous amount of money waiting to be pushed into the system. And it's not like it's waiting for token prices to go up. It's waiting to get into a more efficient economic system, which should in turn move token prices. But we all here, especially, I know myself, Justin, Steve, where we talked about, it's more about participating in the decentralized finance ecosystem, not buying a token and hope it goes up in value. It's more, there's more and more money that's going to be pumped into the system because it's just more efficient. It's an easier way to get more participation from more people that are pay to play, people that are using Axie Infinity, people that are using lending protocols and lending each other money. That's all going to continue to happen because it keeps the economy moving.
Yeah. I was listening to ARCA's 2022 ARCA Digital Assets hedge fund. I'm sure you guys are, I don't know if you guys are familiar with them, but they were talking about kind of that also. And we're going to have to redefine, like, so when we come to crypto, like one thing that's going to happen is there's going to be standards set. I think 2022, you're going to start to see more standards being set, more definitions transitioning from what we're used to seeing in traditional world. And crypto is going to get their own standards. Right. And I'm excited for that. Like that's what's being built right now. And even though you don't see it in the headlines, you don't see that, so much of that work is happening. And I know, Steve, you see it, Justin, you see it, Adam, you see it as well. Like we all see that work. And it's tough because everyone else sees is the headlines. And it's like, it's like so tough. It's like cringeworthy. But when you actually understand what work is, and Arco was talking about all the institutions that they know are sitting on the sidelines. And when there's, what we've talked about, that regulatory clarity just ekes into it, you're going to see a flood and everyone's going to be shocked because no one saw it in a Barron's headline or no one saw it in a WSJ headline, right? Steve, I see you're smiling a little bit. What's going on?
No, it's right. I am a little bit because I have a prediction for this year. Now it's not as bold as Adam guaranteeing no bear markets ever, which we all clearly heard him say on this podcast. So, but I won't leave him out there alone. So in the history of government mismanagement and bad monetary policy, there has never been a magic release valve for your horrible inflationary monetary policy. There happens to be in the US, right? If you want to take, basically what you're wanting to do is take some of that money out of the supply and out of the circulation and get it invested if possible. And there is a magic way to do that. And it's called providing crypto regulation. So people are comfortable shoveling obscene amounts of money in, which reduces the supply and it goes a long way towards solving our current inflation and some of our economic woes. Now, I don't like obviously how all that plays out, but I will definitely predict at some point during this year before the midterms, a lot of our government actors in charge realize that and magically become very friendly towards crypto and watch the short-term impact it has on inflation.
I like it. I like it a lot.
And no bear markets ever, guaranteed.
Oh man. So Justin, anything you want to add? Cause I think I want to end us off and spending the next, 15, 20 minutes. This is going to be a longer episode, by the way, just for anyone still listening. Cause we definitely have to talk about Planner DAO and we have to talk about kind of what's coming there and talk about DAOs specifically too. But Justin, before we get into that, what are you thinking?
I'll keep it really, really brief. I think Adam made a really good point that, 2022, one of the questions, are we going to see these very traditional Wall Street ideas, practices, things that have, dominated our own financial planning practices, are we going to shoehorn digital assets into this old sort of box? There's going to be a lot of people that are going to try that are going to come up with product after, you name it. That's, or are we going to sort of break free from that and go someplace new and different? So for the sake of time, like that just sort of plays off of what Adam was describing, that we have an opportunity to get outside of this box, this Wall Street box that we've all sort of complained about and been victims of. Or are we just going to kind of go back to it and go, oh, no, like PE ratios, this matters for crypto or whatever, whatever, taking these old ideas and trying to wrap them around digital assets.
Geez, Justin, I know Arbor Digital is trying to, do some cool stuff in crypto and trying to make it fit, but you don't have to call us out like that.
Was not specifically referred to, you guys.
I'm just messing. It's all good. But that I say that purposely because we do talk a lot about Arbor Digital and like why we got created. It all starts with why, right? Like Simon Sinek, big believer in kind of always starting with why. So for us, we're still answering that question. And one of the things we are looking towards is does Arbor become decentralized in some way? Do we transition? Do we set up Arbor to be able to make that transition to the next generation of investment firms through a DAO, right? And I think that's a great way to start talking about Planner DAO and what that is. So I've got you guys finally all in one spot. Talk to us a little bit about Planner DAO more specifically, because Adam, I know in our last conversation, we talked about it a little bit and how it's infused with CDAA and all of that. But let's be more specific here. Talk about Planner DAO. What is it? And help people that are listening make tangible how they can get involved. Whoever wants to go first.
Yeah, I'll jump in first. Planner DAO is at its very core, it's kind of a decentralized community of financial advisors, and that's kind of how it started. And it started as a place where we could park the certified digital asset advisor designation as well. We thought when we created that it was definitely going to be a designation certification that was extremely important, probably more important than anyone thought some certification like that would be, especially early this year and late last year. And we think it's going to be one of the top 4 designations in the world at some point. And we needed a place to put it. We always knew it would be with an independent third party, and a DAO, when Steve came up with that idea, made way too much sense. And so that's why we created the DAO. And what we found is having a community of advisors who is interested in crypto and DeFi and understands that world, having that community that can collaborate, especially around some ideas and around a token, which we have as our native currency of the network, is incredibly powerful and valuable. And I will let Steve go into more detail about it.
No, that's well said. And really, the terms community and community ownership, right? They've become just kind of general terms. And I think what DAOs are about are making that mean something again, where the people who are part of the DAO truly have a stake in what's going on. And not just by saying they do, by representing it with their capital, by spending their capital, or by earning it for the work they do. And we're bringing a true economic system into a community and into a profession. And that's what's been exciting. So there's all kinds of places where there's middlemen capturing value because of the legacy portions of our financial system. And that's fine. We just want to build up an alternative. If people are finding value there, by all means, continue doing business. But there's a lot of us who aren't. And rather than sit around and wait for an alternative, the idea was, let's just build it. Let's just use this modern economic structure and the tokenomics of cryptocurrency, and let's build our own structure where we can capture the value of what we're doing. So CDAA holders, when they pay a renewal fee down the road, that can go back to the community and they can decide what to spend it on. Do we want to market to new members? Do we want to do legal research? Do we want to develop a software because nobody will build it for us or understands us? And the community can decide that. And you don't get that option with your other designations, with the other money you spend, with the other groups you're part of. And so that was really the thing. And because we had a small group of like-minded people, like Adam and Justin and many others, it didn't take a lot of convincing or explaining. It was, yep, I get it. I see it. I know I see what we can do here and grab back control and drive this thing. So that's how the journey got started. And it's been great so far.
Love it. Justin, hop in, because I know you do a lot of work.
No, I love the idea of having a community-led group that is truly pioneering the future of this digital asset space. And as we've talked about how broad and vast it's quickly grown, that the only way you're going to be able to keep up is to have a group of advisors, like-minded fiduciaries that are very serious about that responsibility to help understand, all these nuances of DeFi and, NFT. Well, what does NFT ownership actually mean? Contractually, what are you... When you have a group of advisors who are dedicated to understanding and collaborating together around those topics, that's how you can keep up. That's how you can help your clients, in a way that makes sense. So I think that the idea, like Steve mentioned, community is kind of this very watered down word, but with a DAO and with a plan token, that there's a way to sort of reinvigorate what that could look like and what that means.
Mm-hmm. Sorry, we had someone join and I thought it was Matt joining in. So if you're listening, we had someone join, but we're going to keep going. But yeah, Justin, you bring up a good thing, what all that means. I get really excited. And I think, Arbor definitely has made a commitment to spend more time and energy helping the mission, Steve, of what you and Adam have done and started, and Justin and everyone else in the working groups. And we think about it, the next generation of professionals coming in and the current generations of professionals in who are looking for more value, more engagement, right? I think one of the things that really triggered for me, right, was I was able to consult with advisors across 2 different big firms. And one of the things that you always ran into where everyone's always wondering, hey, what are the best practices, right, of how to implement new things or find a niche or run their business differently to sustain growth and sustain their sanity at the same time, right? Like you build, and you grow to a certain level, and there's only so much time before where it comes like, okay, like how can I do this more efficiently? And how can I get access to information and education and do it to where I actually get value from it, where I'm not just logging into my credentials just to like log some hours just to say that I did it, right? But I'm actually getting true value from the program, from the education, where I'm actually excited. And then also, how do I get incentivized to keep that designation up, to keep that education, that programming going? And that's where it's like, this just seems like, I think Adam said it, like, it just makes sense. Yeah. This is the next evolution of what that all looks like, right?
It does. So if we build this properly, and obviously, in my opinion, we'll be a place that vendors and traditional finance should be excited about. Because if they're innovating, if they're doing the right thing, if they're listening to customers, it's a place they're going to want to be. It's a free, it's a free test market. It's free feedback. It's seeing the conversations raw in real time that haven't been happening anywhere. It's really access to something they haven't had before. And so the firms trying to grow, trying to recruit advisors, the vendors trying to build stuff, people trying to sell us things, that's all fine. We're not trying to take commerce and sales out of this business. But I think for too long, the leadership of this industry and this profession has been outsourced to those same people, because there hasn't been a good structure for us to rally around and feel like we're really participating, because it's too big and it's too broad and there's too much going on. And what the DAO allows us to do is people to pick the parts they do care about. So if you wanted to help with the CFP board, right, you better been into rewriting their code of conduct for the 19th time over the last 5 years, right? And like that better have been your passion, or you aren't going to be involved in the CFP. Or, hey, I wonder if there's a 7th step of this financial planning process somewhere, right? So, but now you don't have to do that. You can jump in and there's 1,000 conversations going on in 1,000 different projects. And if you're only passionate about building an index, or only passionate, about getting financial content out to the masses, or pro bono, doesn't matter. Jump in and you can be a leader in that aspect and get compensated for it. And I think that's what the DAO brings that our industry has not had in the past.
And globally accessible.
Yep.
Absolutely. Yeah, I've been blown away at the quality of people that have come in, and just this is truly a diverse group that spans, multiple continents. And it's because the idea of financial education is not a US centric concept. The idea of, truly helping people make sound money decisions is not something that, we have sort of the market cornered on it. And again, the DAO is set up in such a way that it is just drawing some of the brightest and most generous people that I've ever had the privilege of talking to. And that is a very powerful combination to have.
Here's something I was envisioning, right? That when we were together in Austin and we were hearing some of, the relationships, and tell me what you guys think about this. So I envision, right? If you have a decentralized organization like this for financial professionals, let's say you have advisors that are investing in some emerging market or some other nation state that they're usually not comfortable in. Usually you would go out, hire an SMA, hire a third-party manager who has boots on the ground there, has expertise for some amount of time or some relationships, right, there, so they can have some sort of insight and, clarity, so that way, okay, it's not too risky, right? What if the next evolution of that is in a decentralized community? You don't have to rely on that third party's incentive structure, and because they're probably just going to juice up what they're doing, right? And like that's one thing we see with some of these black boxes and these relationships, and currently how invest in these investment boxes that advisors get into. I foresee there being an entire community where if you want to go invest in Brazil, you're going to be able to just go into the Brazil channel of financial professionals and say, hey, I'm thinking about XYZ investment here. Give me the skinny. Does anybody have any, any literature that's unbiased, or can we commission? Can we run a bounty program for anyone in this channel to work up something like that? Like, that's just what I started envisioning. Like, do you guys envision other ideas like that? Like, tell me what you guys envision.
Yeah, that's brilliant. Something like that is perfect, and that's exactly what we need. And it can go a step farther, right? And the people in Brazil can organize their clients who have non-custodial wallets, and they can enter their wallet addresses to collect their spending patterns and their income anonymously, and they can get paid for that. As long as you keep it linked here, we're going to pay you this much of this token for people to anonymously use your data, and they're getting paid for it, and it's real data, as opposed to Google collecting it and marking it up and charging it. There's no end to what's possible, which is why this is so exciting.
Yeah, the amount of creativity. Okay, go ahead.
Mark, this is Adam again. Sorry, I dropped off and came back on, but the idea of aligning incentives in a particular group it's not new to the world. It's just new to aligning incentives across a group that is not kind of all in the same geographic region. And so when we can have this group, this DAO of financial advisors or financial professionals all over the world that realize we're all kind of trying to do the same thing, which is help others with their money and their financial life, then yeah, I mean, there's no reason why it should stay in the US. There's no reason why it should be beholden to what we know of investing. And I think there's a ridiculous amount of power and value in, again, being able to align the incentives and know that we can just get in there and chat with others within the group and not have to utilize the usual traditional methods that we build to move money around and to pay people. And we're able to just change kind of how the incentive structure works and change how the hierarchy works. And it's pretty exciting to be able to do that. And you're right, when we talked about it when we were all in Austin, I think I don't know if it was being in person or being able to say it, or maybe it was having a few cocktails in us or something, but I think it really hit home for me, the fact that we were able to draw some ethical and moral lines in the sand, in addition to understanding that this is well beyond just the US or well beyond just offering a, no offense, Arbor Digital, but offering just a crypto SMA. What we're doing is so far beyond that and so much more important. I think that's when it all hit us, and we're really happy to bring others along for the ride.
And sorry to jump in, but I think that proves a point. That proves a point, which is it's not up to a company to do this, right? It's not up to Arbor Digital to lead the way, because it defeats the purpose. Or my RA, hey, my RA is building all this, guys, come along. You'd be like, yeah, we're good. We're used to that model. And so, as a group, as a community, we need to get out there and plow the way, right? And level it out. And then the businesses can come along behind and offer these solutions. So I like how it's working out.
Yeah. And we take no offense there, Adam. And absolutely, like, again, it all goes back to the why of Arbor Digital as well. Like, if we were just looking to be another traditional player offering a traditional thing, then, we wouldn't be even open to any conversations, right? Like, it's just like, nope, we're going to keep doing our thing. And, you guys go do these crazy things. And I'm just going to consider you guys evangelists that are just crazy. And I'm never going to talk to you again. I think, especially for Arbor, right? We see this as collaboration. We see this, honestly, like, we think the SMA, like in a decentralized fashion, is, I'd rather, and this idea of collective intelligence is really imagine if you can bring together the best financial minds in the world and create strategies and everything like that. The only way to truly do that is in a decentralized way. Like, otherwise you have to create the silos that we see today, right? You either have to go within Goldman's ecosystem, Morgan Stanley's ecosystem, Merrill's, whatever ecosystem it is, you go operate within that, and you don't own that. The company does. And that's changing. That's going to shift, right? And imagine if you can bring all those minds together in one place, where everyone earns, where everyone gets a piece of the pie. That's what we see. Like, we're okay with it, right? Like, that's fine. That's great. That's where the future is going. Sorry, soapbox a little bit. Justin, you were going to jump in before Adam came in.
No, I don't remember, except I think you just signed up for a working group. That's pretty much the only thing I was going to add, Mark, is I think that's exactly what you should do. But no, it's just, it goes back to, we have an opportunity to expand past these very comfortable, traditional, walled gardens that have been built for us. And, what you're describing is a brilliant example of what's possible when you just take a step out and go, we can build anything. We really can attract that quality of a person to unlock, institutional grade research at the ground level in Ireland or India or you name it, because we have an organization that allows for value capture to be, shared and accrued in a way that, again, we haven't had before.
And I think let me real quick, Mark. Let me give you like an analogy that I've kind of been using, because I'm sure there are people who listen to this and go, I don't understand this DAO thing, or why would I do that, or our system works okay, or whatever it might be. So the analogy I kind of been using, and again, not to get overly political and theoretical and all that, is in the late 1700s. The colonies decided that they didn't like what the British were doing, and they didn't like their rules, and they didn't like how it was going, and they probably they felt like they had a better way to do it, and so they fought a war. But eventually the idea was, we feel like we can have a better government. We have the systems in place. We have a way that we can essentially, the United States was really basically a decentralized organization, right? That's how it was originally constructed. But they said, when we do that, we have to organize around our own currency. We can't do it around the British pound, and therefore we create the dollar. And now our goal is to pump up the value of the dollar. Our goal is to build the value of everything underneath it that the dollar represents. And that's kind of what the DAO is doing, not to make ourselves seem like we're some sort of country, but that's what any DAO, that's what any protocol now is doing, is saying, look, there's a better way to do this. And the most efficient way to do it is to organize around this other currency that we have to create. And that's the only way to align incentives. We feel like we can align incentives in Planar DAO and align incentives for the financial services industry that's better for us and better for clients, better for investors. And that's what we're trying to do.
Thank you for saying that last part, because I think in my mind, and when we talk about it too, it's like the end goal here is to provide everyone, the people who we are meant to serve, with high quality advice and guidance on everything financial for them in their life. Help them live the best lives that they can live with what they have and what they've worked and built, right? And how do you do that in a conflict-free way? It just makes more sense. Like when you go down the rabbit hole and think about how can I do that in the most efficient way, like this is going to be one of the ways. And it's not to say that the traditional systems aren't going to sell this. They're still very important. They're going to be there. And we're not just sitting here saying tear down everything, but there's going to be a decentralized option now. And there has to be an option for it, at least the option. And that's where, again, I think I'm sounding a little out there now, but it all comes back to that for us. How can we best serve the people? It's still, to me, I think one of the most atrocious things that's happened is the majority of people can't answer a fundamental finance quiz, right? Like when you guys have all seen the articles and the studies about it, like that's a disservice. Everyone should be able to answer, what compound interest is. Everyone should be able to answer what it, how to, save for the future and how to meet, future obligations with savings now. That's what investing is, right? It's just filling that gap, right? You have goals, you make money now, and you have some assets now. How do we pair those together to make sure you can do exactly what you want to do and be happy doing it, right? So yeah, it's just, we see it as a natural, we said it a few times, a natural evolution, and the optionality is going to be very, very important. And the work you guys have done to get that kickstarted is so important. And so you guys deserve a ton of credit, and I appreciate the opportunity to go on that journey with y'all. But I'd like to end this whole conversation off, this whole episode. Where can people find Planar DAO? How do they get engaged? Give them a quick 30-second, where should they go?
That's all Justin. Go, Justin.
What we can definitely leave a link, but plannerdao.io is the way to come and get involved. Join the conversations. We've got all sorts of groups and topics going on all the time, some live events. We're actually going to have a holiday happy hour later tonight, just as a means for people to get together. And I think we alluded to this earlier, but there's no way around it. You just have to kind of jump in and start getting involved on some level. And the easiest way to do that is just to connect to the different conversations going on, because it's a very active community that's sharing all sorts of different ideas, asking questions. And the more engagement that we get, the better, the quality of the community can really lead.
Awesome. And then I know, so this is a collab episode, taking it back to the beginning. There's another podcast that it's called Crypto for Planner. Steve and Justin, you guys run, right? Like, where do people find that podcast?
No. Listen, Steve and I have started it, but it is a truly decentralized podcast. And so any member of the Planner DAO can request to host it and can ask to interview or share. So yes, we're trying a decentralized podcast. It's, sometimes it's a little bumpy, production quality, maybe not what it should be, but the Crypto for Planners podcast is designed for any member of the Planner DAO to share and share their story, share what digital assets are doing with their practice, how they see it transforming our industry, things like that.
It has been nominated for a couple of awards based on our intro music. So if you haven't checked it out, you're gonna want to do that right away.
For the music alone, yes.
I couldn't agree more. Well, that's exciting. So yeah, I think that's a really good way to on-ramp people to the platform too, and give them an opportunity. Because I know a lot of people may not feel they can do that within their own four walls from where they work. But if you're looking for a way to get involved that way and put some content out there, you have a means to do that. So I think that's really
Absolutely.
Cool. Well, Steve, Justin, I know Adam had to jump. Thank you so much for joining me today. Is there anything you'd like to leave the audience with that we haven't been able to cover today?
No, this is great, Mark. Just keep up the good work. And we need firms like Arbor implementing the things we're talking about and actually doing it in the real world so we get that feedback. And the podcast, the portfolios, I'm a big fan. Keep it up.
Yeah, no, we're so grateful for both you and Matt's involvement. It's you guys are exactly the kind of people that have made the DAO just work very successfully. So thank you for all that you guys have done.
Well, thank you. And if you're listening, come join us. The water is warm. It's nice. Everyone's pretty cool, and everyone's willing to listen to ideas. And we're excited to see where things go in 2022. I hope you've learned something, taken away, not just from what we're excited about, but also what to be cognizant of from a risk standpoint. And with that, I'll see you all on the flip. Appreciate you guys again joining, and be sure to give us a rate and a review on wherever you're listening to this podcast. All right, everybody. Talk to you soon. Bye.
Thanks.
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
We are financial advisors. However, we are not your financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or